PDD Holdings, the value-for-money Chinese e-commerce group operating Pinduoduo domestically and Temu overseas, reported second quarter results for 2026. The company presents a clear structural contrast. Revenue continues to grow and operating profit rose, but net income fell about 12% year-over-year. Wall Street responded with sharp volatility. The stock gapped up about 2.6% at the market open on an initial profit beat, but buyers vanished during the session. Shares sold off steadily to close lower by about 4% from the open and below the prior close. PDD is executing a strategy of trading short-term bottom line profitability to strengthen its merchant ecosystem and navigate external policy changes. The market declined to reward that trade-off today. For the quarter ended June 30th, total revenue reached 112.4 billion renminbi, an increase of 8% year-over-year. Growth has slowed to single digits as monetization dynamic changes across its two core lines, online marketing services and others, which represents advertising revenue, reached 57.6 billion renminbi compared to 55.7 billion a year ago. That represents growth of only about 3%, signaling a clear cooling in ad monetization. Transaction services revenue reached 54.7 billion renminbi, up 13% year-over-year, serving as the primary growth engine for the quarter. On profitability, GAAP operating profit rose 8% to 27.8 billion renminbi, compared to 25.8 billion in the prior period. Non-GAAP operating profit was 29.1 billion renminbi versus 27.7 billion. Non-GAAP operating margin contracted slightly to 26%, down from 27% a year ago. Net income attributable to ordinary shareholders fell about 12% to 27.2 billion renminbi, down from 30.8 billion. Non-GAAP net income dropped about 13% to 28.5 billion renminbi. Expense growth was concentrated in technology, where non-GAAP research and development expenditures surged 40% year-over-year to 4.6 billion renminbi. The balance sheet remains heavily capitalized, ending the quarter with 456.4 billion renminbi in cash equivalents, and short-term investments. The drop in net income stems directly from management prioritizing long-term investments through its 100 billion renminbi merchant support program alongside higher research and development outlays, even as first-half e-commerce competition intensified. The executive Q&A session detailed how management is deploying capital across global logistics, domestic logistics, and supply chain upgrades. Thomas Chong of Jefferies asked about the impact of the European Union temporary customs duty on low-value cross-border shipments introduced in July, the overall growth strategy for global business given policy headwinds, and an update on the first-party brand business strategy. Chairman and Co-Chief Executive Chen Lei stated that regulatory and compliance changes create significant operational challenges alongside growth expectations. Regarding European Union customs policy changes, PDD is actively assessing adjustments to its supply chain and optimizing fulfillment processes. Chen acknowledged that in the short term, cross-border orders in affected markets face lower fulfillment efficiency and higher costs, imposing a considerable impact on those segments. Over the medium to long term, PDD is responding by onboarding more high-quality local merchants to expand local supply, while accelerating the build-out of local warehousing and fulfillment infrastructure to increase local delivery coverage and improve supply chain resilience. Alicia Yap of Citigroup asked about long-term investment priorities for owned warehousing and delivery networks, as well as the impact of quick commerce and same-day delivery investments by peers on user mindshare and competitive positioning. Co-Chief Executive Zhao Jixin explained that logistics investments are targeted specifically where they address merchant bottlenecks rather than building out redundant capacity. In the domestic market where logistics are generally mature, PDD focuses resources on remote rural communities under its 100 billion support program and free shipping to villages initiative. Zhao cited concrete operational metrics, noting that PDD established service stations covering all 177 villages in Yu County, while in Shandong Yushui, daily village parcel deliveries exceeded 100,000. This infrastructure improves direct delivery of agricultural inputs like fertilizer while boosting order conversion for rural merchants. In select overseas markets where fragmented shipping creates high costs, PDD is investing in targeted transit warehouses to consolidate shipments and lower logistics barriers for local merchants. Joyce Rue of Bank of America asked for an update on the merchant ecosystem following the 100 billion renminbi support program, whether improved merchant health will lead to higher advertising spend, and how revenue growth might track relative to broader consumer spending. Zhao Jiazhan reported that supply chain support has reached major agricultural regions and industrial manufacturing clusters, driving direct gains in quality and operating efficiency. He highlighted a Guangdong cosmetics manufacturer that used platform support to lower operating costs, reinvesting the resulting savings into a 2-year research and development effort that yielded patented national brands. He also cited merchants in the Zhongshan lighting industrial belt who utilized platform rapid testing capabilities to upgrade component quality, releasing a smart lighting product that generated several million renminbi in sales within months. Zhao emphasized that PDD prioritizes structural ecosystem health over immediate commercialization, believing lower merchant operating costs and higher profitability will organically drive sustainable platform value over time. PDD is intentionally absorbing lower net income and slower advertising growth to fund merchant subsidies, Rue logistics, and overseas transit infrastructure. Meanwhile, competitors continue to invest heavily in instant retail and fast fulfillment. To capture consumer mindshare, PDD has chosen to defend its lower-cost supply chain foundation, leaving Wall Street to weigh long-term ecosystem investments against immediate profit expansion.